What's poppin', guys? Welcome to Money Talk, then on one news source, then on one information source, then on one entertainment source for everything and anything regarding the stock market and money. Alright, guys, and today we're going to be discussing the bloody day, alright, guys, when it comes to growth stocks today. Unfortunately, fortunately, the S&P 500 this morning opened at an all-time high, right, guys, and it set a record for itself, right? Jobless data came out today, and the jobless data was looking good, baby. It was looking good, all right, guys. Like we went from let me see the numbers right here. Yeah, if it fell 25%, that's that was good, all right. That's how good it was. But then again, us investors in the growth sector, we saw a whole lot of blood. All right, unfortunately. Now, why? Why did this happen? Well, back to the basics we go. All right, back to the basics. I still believe that it's all because of the bonds. All right, classic answer. You guys have heard me say this 1,000 times. Bonds, bonds, bonds. But what do bonds have to do with the stock market and etc.? I've covered this before, but I'm gonna cover it again today since today's day was bloody. CCIV down a lot, Palantir down a lot, Neo down a lot, Virgin Galactic down a lot. All of the growth stocks that we like were down today, right? So why? Why did this happen, and what does it have to do with bonds? Well, bond yields went up, okay? And when bonds, something that's not as a, a medium of investment that's not as risky as stocks, right, goes up in value, right? People are more likely to buy bonds since it's less risky and more value. Maybe not more value than the stock market, but the risk to reward ratio between the bonds and the stock market, the bonds are winning right now. Okay, at the point that it's at, well, I don't think the bonds will win over the long term, but currently right now the market with all the threat that we're seeing, it shows us that that's what the sentiment in the market is. Right now, what should you do regarding all this threat? Okay, should you sell and try to buy lower? No, don't do that. That is the biggest rookie mistake. Because let me tell you something. As soon as you press that sell button on the red, the next morning is gonna be green. All right, guys, and that's just how, like, you don't want to risk it, okay? Because I do believe in 3 months from now, 4 months from now, the market's gonna recover and people are gonna look back again on growth stocks because the market always goes through cycles, right? It's a continuous loop, a continuous cycle, right? And every single time that the markets crash, the markets recovered. Okay, so as long as you're investing in the right companies, okay. Now this doesn't include the penny stocks I often speak about on this channel, right? Although those are also good companies, but they're not really companies with strong foundations and stuff like that, right? Like for example, like Palantir, like you can't compare Palantir, right, such a large cap company, to maybe 88 Energy, right? That's drilling for oil, right? You can't really do that. So I think right now all you gotta do is hold, all right? Either hold or buy more. That's all I can do. And how should you buy more? Should you buy more today? Should you buy more tomorrow when it's more red? Or should you buy more next week? Well, we have a simple strategy called the dollar cost averaging, right? Or dollar average costing. I forgot which way you say it, but you say it in one of those ways, okay? So basically what you do is that let's say you have $1,000, okay? Let's say you have $1,000, and instead of buying that $1,000 the first day, right? The first day that you want to spend $1,000 on, you don't do that, okay? Because what if you buy it that day and the stock market keeps going down? Well, what you do is that you average your dollar, right? So you buy, let's say, $100 worth of shares today. You buy $100 shares of worth tomorrow, $100 shares of worth the next day, $100 worth of shares the next day, and on and on. Now, it doesn't have to be the next day specifically. It can be weeks. It can be every 2 days. It can be whatever you like it to be. Okay, but and you know what, guys? You guys, like, in today, like, I think I heard of dollar average costing, or dollars cost averaging, whatever way you say it. I heard of this about a year or two ago. Okay, and at the time, with all the transaction fees that you had to pay for every single stock that you bought, it didn't make sense. It really didn't make sense to me because, like, if I were to buy $100, well, not $100, but let's say I was gonna invest $5,000 into a stock, okay, and and I was gonna do, okay, $500 each day for 10 days. All right, $500. I gotta pay what, like $10 transaction fee on some of the sites, right? For example, I use TD, right? I use TD. I used to invest through my bank before all these Webull and Wealthsimple and etc. came out with zero transactions, and all of a sudden I'm down like 2%, right? And I just bought the stock and I'm already down 2%, which is like, that's not good, right? That is not good. Okay, so with that being said, guys, you always want to be using a zero transaction fee platform, right? And you know what, your boy Money Talk, I got you. Okay, I got you with the links. Okay, so if you go down below, if you're in the United States, right, if you go down below, I got a Webull link down below, right? And Webull is a great site. There you can day trade with them, you can do whatever you usually do, right? And they're completely $0 transaction. And then if you're from Canada, right, my Canadian friends, all right, we got Wealthsimple down below. All right, now you just click on Wealthsimple, you click on the link below, and I think you also get, I think, $25 or something like that for free. And with the Webull offer, it also comes you get one free stock. Okay, enough of the putting you guys on. Okay, yeah, so where are we headed from now? Like I said, right, the next couple of months are going to be volatile. The economy is going to open up, right, and people are going to spend money, and soon things will be back to normal like they used to be. Okay, now will the stocks recover 100%, right? That's the question to be asked. Will Palantir go back to the 35 level or 40 level or whatever it was at, right? Will NEO go back to the 50 level, right? 50, 60 level. Will CCIV go back to $60 level? I mean, CCIV right now, guys, this stock is at $20. Like, it was at $20 before the freaking before the, what was it called? I forgot the word right now. But before the, let's say, the partnership with Lucid was announced, like, you guys are getting these stocks on a discount. Okay, that's how you should be thinking about it. All right, and yeah, that's it. So with that being said, guys, let me know down below. Let me know how much longer you guys think the stock market will bleed for, and if you got them diamond hands, okay? Because we don't support paper hands here. And as always, guys, make sure you smash the like button and subscribe. All right, at Money Talk, we work hard on CNBC, baby. Like I said, we got the entertainment, we got the information, we got the news, we got it all, baby. Okay, so make sure to smash the subscribe button. With that being said, thank you for watching, guys. Money Talk out.